9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. The U.S. launching a fresh wave of attacks against Iran, pushing their ceasefire closer to collapse and reviving geopolitical risk.
Oil extends gains after the latest strikes in the Middle East. Chinese stocks nearing bear market territory as geopolitical turmoil and a sell-off in tech weigh on the region.
Meanwhile, traders brace for the SpaceX trading debut. Now, sources telling Bloomberg the record share sale is more than 4 times oversubscribed.
And Ant Group's international business is said to be considering raising $1 billion, which could pave the way for its long-delayed IPO. So a few things, Dave, really, when you have some of the Iran headlines that are crossing here where it's bringing oil prices back up a little bit and, you pair that with the SpaceX IPO that's happening a little bit later on this week, that certainly is adding some, nerves into this market once again. And even these, core CPI numbers of the U.S. didn't quite actually alleviate some of those concerns out there.
No, despite it actually coming in when you look at some of the core measures actually coming on the softer side. It's just, I guess, markets are a bit touchy. Given, of course, the liquidity issues right now, given the massive listings, and, of course, how far some of these markets have come. I think when you look at the oil story, which is interesting, too, because it's now starting to bleed into parts of the inflation story and not so much a tariff story, right? And I think Brent on 2 days is up 4%. It's everything but Brent and the dollar, so it's clearly a risk-off session today. We'll get into the latest in Iran in a couple of minutes here, but it's suffice to say all these things that Yvonne just mentioned is leading to risk assets being taken off the table. And I think gold, which is back above 41 on the most active contract, but we're certainly closer to 4,000 right now than we were a few months ago. So it's certainly something to watch to today.
Yeah, and it's interesting, even despite that softer sort of U.S. CPI print, core print, we should say, you are still seeing the market pricing in that Fed rate hike.
It's still priced.
It's still priced in, right? And it's quite interesting even from the likes of Bloomberg Economics. And they're thinking maybe this takes a bit of heat off Kevin Warsh as he heads into his first meeting next week from the FOMC, because in some ways you're starting to see some of these non-essential items and what consumers are actually starting to buy less of. They're saying is you're seeing disinflation in some of these sort of categories here. So perhaps that does lead them to still have some flexibility. And they still think that BE thinks that they could still cut later on this year as well.
That the door is open for a reduction in rates. I mean, UBS is taking the opposite view here. And what they're saying is look at the dots next week because they do expect that to get priced out. And the beginning, which is interesting, the beginning of the easing cycle in their view begins. In other words, we are done with the easing cycle and we will go into the new one, the fresh one, March of next year. So the balance on inflation risk is evolving, but it's still towards the upside. And the dot plot will show a shift towards no cuts in 2026. We talked about SpaceX. I think we get pricing. So we're done with the books are closed.
Yes.
And we'll get the pricing later on today, well, on the 11th, which is effectively the calendar date as we speak.
Yeah, so we're looking for that for the next 24 hours or so. But later on tonight, possibly, we might get that pricing, of course, and then it's going to list the following day.
Yeah.
So I think there is a bit of angst amongst the tech space leading up to that, which might not bode well, of course, for SpaceX. We'll see, right? It could be just parts of this world just waiting for that to happen here. It could suck a lot of the flows from this part of the world maybe back to the U.S.
I mean, it's like the first time we're ever going to see a rocket launch, right? We just have to wait and see whether or not it gets off the ground and how quickly it does.
It's not just the stock price, right? You got to take a look at if this is one of the largest, if the largest IPO ever, right? It's all about are the systems in place to make sure that settlement transactions are going to go through, executing these orders. I mean, it's going to be a massive undertaking, nevertheless.
Yeah, the worst time to go from T+1 to T+0. Not that that's operationally on the table today. We talked about some of the benchmarks across the greater Chinese market. Of course, when you look at the Hang Seng Index, we're very, very close to taking out the recent low. And on MSCI China, we're also close to about a bear market there, so about 2.5% away. We're looking at some of the risk assets. Can we show that, please? I think Taiwan just opened up. That should be seeing some pressure right now in the early goings. So on the back of everything else, including, of course, the latest.
Don't forget the TSMC numbers that came out yesterday as well. We did see the ADRs actually fall to 4%, which is not a really common move from TSMC. So that certainly is one thing to watch here. They did say monthly sales did rise some 30%, thanks to, of course, the sustained AI chip demand. But yes, they are starting to see, the stock did fall, right? There you go. We're slightly lower by 0.4% in Taipei here right now. For more really on what's been going on in Iran, what we have been hearing here, the latest headline that we're hearing from the U.S. is that the military has completed the latest strikes in Iran. For more on, of course, this re-escalation of fighting between the U.S. and Iran. Let's bring in Jill Desis, our news desk managing editor. This is probably one of the biggest flare-ups we've seen in weeks, really. What's the latest?
Yes, that's right, Yvonne. I was actually just reading this latest statement from CENTCOM saying that the latest round of strikes has been concluded, but at the same time, it's really difficult to even call this temporary truce, this temporary ceasefire anymore. So this is what was announced back at the beginning of April, because, what you've seen over the last couple of days are these, trade-offs and strikes between the U.S. and Iran, and you've also seen some growing impatience from Donald Trump himself talking about how, even if this latest round has been concluded, he's threatened to continue bombing Iran if they don't come to the table and ultimately sign a deal. So you do see that, despite the fact that Trump he's been kind of going back and forth over the past several weeks at this point over, we're going to reach a deal, we're close to reaching a deal. At the same time, obviously, reintroducing some of these bombing campaigns. At this point, it's really unclear how exactly we get both of these sides to the negotiating table to the point where there's actually a longer-lasting truce in place. And I think you've got to take some of this recent action, this military action from the U.S. and say, are we actually going to be able to go another 24 hours without seeing renewed strikes again?
The latest from the other side, Iran. So we've heard some details on the Strait of Hormuz, and we also understand that they targeted the Fifth Fleet in Bahrain.
Yes, David. So what we saw yesterday was that after the after that round of strikes by the U.S., you saw some targeted bombing or military strikes rather from Iran on the U.S. Navy fleet in Bahrain. Yep. We saw some other reports of strikes in Jordan and Kuwait. So there was a little bit of that trade-off there, although we haven't seen anything that rises to maybe the level of significance that you saw earlier this year. I'm thinking back to when Brent really spiked in March when there were, that Qatari LNG plant that was targeted. So we haven't seen anything like that at this stage. As for the Strait of Hormuz, again, you're seeing some conflicting statements there. You've got Iran saying, or you've got state TV rather in Iran saying that the Strait of Hormuz is completely closed. But then you also had Trump earlier today saying that commercial ships were able to transit through the Strait of Hormuz. And Trump really, again, with that Trump bluster saying that the U.S. controls the Strait of Hormuz. So you do have those conflicting statements there. Obviously, we saw a little bit of, that bump in Brent at the open today, kind of indicating that, the energy markets are looking at this and are having a lot of jitters there. So I think still some unresolved questions about how exactly, ships are able to transit through the Strait of Hormuz, especially when there's this ongoing threat of these potential flare-ups, from military strikes and such. So again, at this point, very, very latest line just within the last couple of minutes is that U.S. Central Command is saying that this latest round has concluded. But I think, when you saw what happened yesterday, what you saw has happened today, it's difficult to say whether or not that's just going to, potentially happen again tomorrow.
Both versions both can't be true. So, Jill, thank you so much for splitting the difference for us there. Jill Desis, our news desk managing editor. We talked about the tech sell-off. Not as bad as the initial goings, but still in the red. As you can see, we're down on the benchmark 0.5%. I think some of the big names are coming up on your screens. TSMC's down about 7.10. Samsung. This looks like a normally down day. Let's bring in Anthony Stevens, of course, our markets reporter here for more context on this. And what are you watching in as far as the tech space and the macro outlook's concerned here?
Right, just for the macro, right, when a number comes in line and there's a big market reaction, then you know that the details matter. Okay. And the details here are that U.S. consumers are pulling back and suppressing core CPI while energy is pushing up the headline number. That combination is bad for markets, right? People can't consume it's in line with low consumer confidence. Alongside that, we can't argue anymore that the energy shock is transitory, right? Like we literally went through how convoluted the system is in getting this energy crisis reduced, this war out of the way. So it does look like the energy shock is maintained. Now, the reaction function from that is retail is cutting their biggest trades. They are struggling to pay their bills, let alone punt in stocks and gold and Bitcoin and the like. Right. So you see gold break the 200-day moving average, have a big move. 4,000 is in play. Bitcoin has been sliding for weeks, and they cut their most speculative corners of the tech rally. And now that is coming into the Asian session in a very complicated way because we face this liquidity vacuum ahead of SpaceX. So that sets us up very interestingly here.
I like your morning note. It's like it's basically Iran and Elon right now. Within the tech sell-off, though, are there any themes that you're watching out for?
So what we're seeing over the session is people are gravitating to quality, right? You've seen that over the session. We opened up very bad, and now people are starting to get back into the memory sector, which has the cash flow right here and right now, while they're being a lot more circumspect about stuff that has kind of dream-like valuations, like physical AI, robots, and the like. That stuff is still weak, but people are rushing back into Hynix. They're rushing back into TSMC compared to where it was priced overnight. So that quality drive, that will be interesting to see as markets recover. What are the names people buy? And in the early days, it looks like there's no rush to get back into the most speculative corners of the market. One last thing to mention, people are trying to get issuance ahead of the SpaceX and OpenAI IPOs, and that's not going well at all. Supermicro was down 28% after they tried to raise money ahead of this IPO.
All right, Anthony, thank you. And as Anthony was talking about, right, getting back into those sort of traditional
quality names,
AI names like SK Hynix and the like, and really that's helping to lift the Kospi here this morning. We basically have erased a loss of as much as 4.5% in just the last couple of minutes or so. So certainly we are back above positive territory when it comes to the Kospi here today. And that means, well, what does that mean for China markets? Certainly there's a lot going there as we count down to the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
I think that this is detrimental to your U.S. interests. Why don't you welcome the liquidity from all over the world?
Companies are not raising for the sake of raising. They're raising for clear use of proceeds and because there's clear business opportunities ahead of them.
And if you really peel the onion and look into it, I'm quite sure that you'll start seeing a lot of companies which may, be what you generally looked at as Chinese companies.
When you look at Shanghai, look at Shenzhen, we have huge number of excellent tech companies at very attractive valuation, waiting for investment.
All right, some more guests speaking at Bloomberg Invest Hong Kong on Wednesday and really touching on that topic of that SpaceX IPO. Just to give a little bit more context, what we had with our conversation with Paul Chan, the financial secretary, he was talking a little bit more about the fact that Chinese and Hong Kong investors have been barred from taking part in this IPO because of national security concerns. And he said, look, why can't we share the liquidity in some ways? So certainly that's one thing to watch here, of course, of the demand picture that we're seeing across this part of the world when it comes to this mega deal that's coming out. We've learned when it came to the SpaceX IPO has attracted demand for more than 4 times the available shares. Now, banks were expected to stop taking orders after the U.S. market closed as investors brace for that biggest public debut ever, Dave.
Yeah, and Michael Hythe is with us right now, our deals editor. Michael, we're almost there. Let's count 48 hours from liftoff. But yeah, take us through what we know so far. The books, we understand, have closed. There's clearly a lot of demand going into what was already a substantially large deal. What do we understand about demand, and where did the demand come from?
All right, the biggest day is almost here for the biggest IPO. The books are interesting because the institutional investors were accounting for about 70% of that $75 billion. Their orders are in. The only drama tomorrow for them looks like it'll be how much of the amounts they requested they actually get allotted. The same for retail investors, about 30% of the total. Then presumably the price will be confirmed as $135 a share as planned, and then it will go on to trading in Friday in the U.S. midday. And that's when the perhaps real drama will kick in as to how it trades. Does it pop? Does it not pop? The investment is strong. Lots of retailers. As you noted, large pools of capital from China, Hong Kong, not included in this IPO. Japan, Australia, Canada, and some countries in Europe are really the only overseas allotments that are being handed out. And there's still a lot of demand. Japan's portion the shares being sold there was increased by a quarter, about 2.5 billion. And because Japan has not had a really large IPO and the market's been kind of down there for a while, the demand is apparently coming in. And as noted, it's oversubscribed there. It's oversubscribed generally elsewhere, too.
Yeah, I mean, certainly there's that enthusiasm that you're seeing all across the world in some ways. What do we need to look out for on the day that things list? I mean, is the plumbing in place, right? When you're talking about the amount of orders and people that are really kind of trying to buy in on this right now, are the risk management systems, is everything in place to really kind of stomach and deal with, of course, this massive sort of frenzy here?
That's one of those remains to be seen and proved in real time. The one thing we know for sure is because there is so much focus on this, because it is such a large listing and so important, everyone involved is, I'm sure, working overtime plus to get it right. That includes NASDAQ does not want any sort of glitches in this one whatsoever. And the index funds that are involved and the buyers, and it's going to be everyone working, I'm sure, to get it right, because it will have fallout if things go wrong. I mean, there are other large listings coming up, as we know, OpenAI and Anthropic later in the year, perhaps, and the ability to process orders and share sales once trading starts, especially, it will be very critical to sort of proving the sturdiness of the market.
Okay, and the integrity of the piping. And hopefully nothing goes down the toilet. Michael, thank you so much. Michael Hytha there, our deals editor, as we go into this. Think about it, this dress rehearsal going into some of the other big ones, but we have to get through this one first. Right, we're about a minute into pre-markets in Hong Kong. We're down about 0.3 and 1%. The Kospi up. Who needs an X when the Kospi's playing with your feelings this way? We're now down again. In fact, okay, so we've had to rewrite our scripts. We're down again on the Kospi. But anyway, let's get to the other story that we're tracking here on ads.
Yeah, and it's really about, the fundraising environment and what we're still seeing here, right? So Bloomberg has learned that when it comes to Ant Group's international business, is considering raising about $1 billion to ramp up growth. Let's bring in our China correspondent, Min Lo, on, this fundraising. It gives us some signs of what this whole upcoming IPO could look like. We've been long waiting for some news.
Yeah, many years in the wake, in the making, right? We all remember what happened in 2020 when what was meant to be the largest IPO at the time had been foiled by Chinese regulators cracking down on that company. So we understand from sources that Ant International is now looking to raise $1 billion privately that could potentially lead to this IPO in Hong Kong, maybe as early as this year. But of course, the conditions around this IPO is very different from what it was 6 years ago. At the time, Ant Group was valued at $280 billion. Now, as of 2023, when there was a share repurchase proposal, it was valued at just under 80 billion. So that is less than a third of what it was before. But this time, though, we're talking about fundraising by Ant International. So Ant International is carved out of Ant Group after that foiled IPO to really climb over some of the regulatory hurdles. So Ant International is now headquartered in Singapore. It answers to MAS, so it doesn't have to answer to the Chinese regulators, and that puts it on a more stable path towards this potential listing.
So what does the international arm do exactly?
So we all know about Alipay, and the international arm has a service called Alipay Plus, which handles all the cross-border payments for more than over 200 markets. It supports more than 300 payment methods. It also has a separate merchant-facing service that helps these merchants accept payments in over 100 currencies. And then it has another unit, which is a B2B service that handles cross-border trade payments. And the fourth business unit is called Better. It is an AI-powered digital lending service that helps clients with treasury and foreign exchange management. So revenue-wise, pretty strong. Last year, it was more than $3 billion. And of course, an IPO would give it necessary cash to potentially kind of continue on these international acquisitions as well as expansion of its payments ecosystem.
Min, thank you so much. Min Lo, our China correspondent there. Going into the opening bell, 1/10 of 1% to the downside on the Hang Seng Index. We are flirting with 11-month lows on the benchmark. Lots more ahead. A preview of the trading session is coming up next. This is The China Show. Welcome back. Going into the open today, we're looking at a couple of benchmarks and specifically respective levels on each one. Hang Seng Index, in fact, we're almost there, if not already there. Just something to watch. Just at about where we are right now, maybe 24,370 thereabouts. Below that level, we're effectively there. That takes us back to, flip the page, please. Lowest level since July of last year. So effectively 11, 12-month lows. MSCI China is still a bit far away from a specific level that we're tracking. We're down about 16.5 currently from the peak back in October, but effectively we're now looking at about the lowest level here, going back about 9-10 months, and we're now near bear markets. We're about 1 or 2 days away from that specific level at about 73. Nice whole round number there, Yvonne.
Yeah, so certainly that's going to be one thing to watch. Do we see some sort of catch up now that we are seeing this unwind of Korea and Taiwan? Although, Korea is kind of doing a whole kind of whipsaw thing this morning as well, just given the volatility around Iran, of course, of the SpaceX IPO and pricing set to come out just a little bit later on today. In terms of your analyst actions here today, HSTECH getting an upgrade there from JP Morgan, raised to overweight with a price target of 71. Hong Kong dollars, Minimax as well, rated new buy at CMB. Air China 8 shares also raised to a hold at DBS Bank, and they're saying, the mix looks a little bit better now in terms of the reward and all that, risk and reward, I should say, of some of these airlines, according to DBS. One thing to watch is AIA in particular here. So, interestingly enough, you heard from Morgan Stanley when they're talking about there could be some upside here, given that the recent sell-off has made its short-term valuation more compelling. You pair that with what JP Morgan is saying about the financials, so HSBC stand chart. They're saying compelling entry points as well here after, of course, a lot of the shivers that we've seen when it comes to cross-border curbs, and the light has really weighed on the sector. You take a look when it comes to the rest of the market here in terms of oil prices and oil stocks. That certainly is, we're seeing a lift there when it comes to some of these oil majors here today. We're tracking what's going on with the miners as well.
Yeah.
When we take a look at what's going on, gold prices and silver prices, we continue to see, of course, that downtrend when it comes to bullion here. And there you go. You're seeing the likes of Jing Gold down some 3%. We've got the open coming up next. This is Bloomberg.
Right, welcome back. You're watching the China show going into the open today. So a couple of big stories. The latest on Iran, and it does seem markets are somewhat putting a large part of the recent story behind it. And I think the announcements from the U.S. CENTCOM earlier on might have added to some risk appetite in the last few minutes or so. So that's number one. Of course, it's still very fluid, just to note that. And of course, the SpaceX IPO is another big factor to contend with.
Yeah, I mean, when you're talking about what could be the biggest IPO in history, there's going to be a lot of plumbing, a lot of, I guess, the logistics side of things to make sure that this IPO launches in a smooth way, right? So maybe that's why you're seeing a little bit of angst leading up to this IPO here, and a bit of rebalancing, of course, still when it comes to this whole tech sell-off here. You have the Iran headlines, and that really does not bode well for risk assets here today. But then again, Korea has been just kind of going all over the place here. CSI 300, we're up about a third of 1%, down about a third of 1%, I should say. So we are seeing some pressure when it comes to onshore equities today. You see what Shanghai crude is doing, and it's kind of following the oil price higher. We're up about 3.5% for Shanghai crude futures. And we're focusing very much on what's going on with likes of gold, silver, that continues to underperform here, and really following the likes of what we saw with Bitcoin overnight amidst these risk-off moves. And we're watching very closely what goes on when it comes to, of course, the copper side of things. So that's also falling here today. You take a look when it comes to some of the big cap names like Capricorn Tech, not much movement there, but CATL A shares are lower by close to 1%. We're watching this Eptolink Tech. This is one of the darlings, of course, that's been listed onshore. They are planning a second listing in Hong Kong. That announcement did come yesterday there. The stock, at least, is slightly lower here this morning. China Resources Power, that also came through and got the approval for a Shenzhen listing as well. Take a look when it comes to the Hong Kong dashboard in particular here. Obviously, we've been talking about, the financial side of things, right? So after this sort of the nerves and wobbles that we saw around HSBC, Stanchart, AIA, some of the insurers on the back of these cross-border curves and what it could mean for the financial services sector here. You have the likes of the sell side like JP Morgan, like Morgan Stanley, now saying, look, these are attractive entry points now after the sell-off, and maybe time to buy in. Stanchart, though, we're still seeing continued downside, about 1.6%. HSBC is slightly lower here today as well. Large cap, big tech still looking pretty dicey here. Alibaba is down close to 2%. Of course, we got news, according to our sources, about Ant and its international business and this fundraising round, which could pave the way for that IPO we've been waiting for years. The chip space is not looking too good here today. Hua Hong Semi is down close to 1.5% as well. We've been talking about, you see TSMC under a bit of pressure here on the back of some monthly sales numbers, but even SK Hynix and Samsung have been kind of wavering between gains and losses here this morning. So mostly lower across some of the AI trades here. And we're watching very closely when it comes to precious metals, right? So, we were close to maybe getting closer to that 4,000 level for bullion here. So we are seeing some of these miners feeling that today.
Gold's gone, I think we're now down 30% on gold from the peak. So there we go, 4,100, 4,000, Laupu Gold. It's also worth mentioning Chow Tai Fook, which has been played as a gold play, is also coming up with earnings today, just to keep that in mind. Okay, so all things equal, we talked about this. It seems that we are getting a bounce at the open today. Hang Seng Index is near, but maybe not quite there, might not get there today. A 1-year low, 11-month low. So as you can see on the chart, that's very close to the bottom that we had back in March/April. MSCI China is also nearing a bear market. We're down about, let's call it 17% from the peak that we had back in October. Certainly, you look underneath the hood, the constituency makeup of these two benchmarks, not a lot of pure AI plays, and that's really leaned towards the consumption story and some of the platform companies that, when you look at it from an earnings perspective, the earnings just haven't been there, at least comparatively to what you have elsewhere in the region.
Now let's bring in Jing Sima, Chief China Investment Strategist at BCA Research. He's in our Hong Kong studios. Jing, it's good to have you. You guys downgraded offshore equities earlier this prior year. That trade certainly has played out for you guys. Do you see any sort of signs of catch-up or even anything more brighter in the future now for this?
Yes, so we downgraded Chinese MSCI China Index basically because the heavy weight of consumer-facing e-commerce in that index. So I think for the rest of the year, we're not seeing any policy support, any meaningful policy support in the consumer sector. So I think that's play probably. We're maintaining our call for the rest of the year at least.
That's fairly non-consensus. Most economists that we talk to here think that the consumption story is about to pick up.
Yeah, well, we have a contrarian view here because I think our structural view is that if we think about Chinese economic rebalancing, we're actually thinking it differently. We're not thinking that policymakers are going to meaningfully boost consumption or consumer sector. Well, consumption really is driven by mostly three things, job security, wage growth, and also households' willingness to take on more loans, and none of the three is happening in China. And without any meaningful policy support, any structural reforms, this is not happening. We're not seeing any meaningful pickup in consumption. Rather, I think the economic rebalancing is happening in the manufacturing or industrial supply chains that, in China now is very competitive in midstream industries, in manufacturing sector. But upstream, China does not control the prices of energy, prices of materials, prices of a lot of chips and semiconductors even. And then downstream, China doesn't control final demand. Most final demand is coming from external. So I think China is rebalancing in that sense as China is moving towards more investment in the upstream industry, meaning securing food, securing energy, securing
controlling
materials.
The pricing upstream.
Exactly.
You're also neutral when it comes to some of these AI-related plays in China.
Yeah.
Is that a more of a fundamental story here?
Yeah, well, I think there are two main reasons. One is a lot of those companies, they're selling this AI story, but, we don't see monetization yet. We don't see profitability yet, especially compared to some of the Korean companies, Taiwanese companies, and U.S. companies especially. So in relative terms, I think for global investors, Chinese AI companies are up and coming, but they're still emerging. They're not there yet. And the other thing is, I do believe we're in a late cycle. A lot of indicators are showing signs of a typical late cycle in CapEx. So I think AI CapEx is a pretty certain story, but on a rate of change basis, this year we see huge CapEx. Next year we're going to see CapEx in absolute levels, but rate of change basis, we may see a moderation.
Okay. Is that going to play out in China, though? Because the AI plays in China have largely moved along the domestic story, not so much the global CapEx story. I just wonder how those two themes intersect.
Well, yeah, they are. You're right. There are two themes. One is the substitute of imported chips and things, domestic technology, self-sufficiency. And the other one is external demand. Well, if I look at all the companies in the midstream industry in China, the companies that are actually reaping huge profits are the ones export to the U.S., are the ones along the U.S. AI CapEx boom supply chains. So there are definitely two stories, but I do think the external demand is more on probably have higher risks.
That's right.
Okay. Where does that leave what you tell clients? What would you recommend still as you could still, if you want to still stay invested, but, still find some decent sort of returns in this market? Where would that be?
So we are slowly moving away from the AI darling stocks into something we're starting to look into infrastructure related, more of the picks and shovels kind of sectors, I would say, raw materials, industrials. We do see very early signs of a pickup in infrastructure investment, especially central government regulatory oversight over local government's financing and local government's regulatories, basically. So I think that those are early signs. Usually when you see those signs, you see some pickup in infrastructure investment. So our bet is second half of the year, we are going to see a step up in investment in the infrastructure sector.
To the point you were making earlier, the rebalancing of the economy, it's the industrial side. Do I find those names onshore mostly or offshore?
Onshore. I think right now, mostly onshore. Not because the companies are not listed in Hong Kong. It's just those companies account for a smaller share of the offshore market.
And how much visibility do you have over earnings? And how receptive are foreign investors to going maybe down the market cap ladder onshore? Because that's quite a bit of a leap for foreign dollar investors.
Yeah, I think for global investors, onshore markets is more of a buying the insurance policy, because when global markets are in a gyration and global investors are risk averse, usually onshore markets have lower volatility. So you want to leave a little bit allocation to A shares, not because A share companies have high growth story or earnings story, but because they are less volatile, and also RMB is more stable.
How do I look at the power side of things, right? I think people say when I look at China, if I want to play the AI play, commodities and this whole kind of green tech, renewable sort of theme can really emerge as something that is that AI adjacent play. Is that something that you're looking at very closely now, or?
Yeah, I mean, I think you have to have a balanced portfolio in terms of for especially for dedicated China investors, you need to have a more balanced portfolio. You want to stay in the AI sector. You want to capture some of the early, emerging sectors, but you also want to stay safe, stay in some of the not so exciting, right? Yeah. Not so exciting sectors. You also want to have some exposure to that.
Okay, Jing, thank you. Jing Sima there, Chief China Investment Strategist at BCA Research. Coming up, partners at PwC China are worried now about their finances amid Evergrande's liquidation. We're looking into why their personal assets could be on the line. This is Bloomberg.
Right. Interesting story we're going to get into right now. So, that Evergrande PwC story, and you have some partners at PwC are exploring ways, because they're potentially on the hook here, to protect their own personal assets amid, of course, these concerns that the financial fallout from that liquidation of the Evergrande group then seeps into some personal wealth issues. Let's bring in our credit reporter, Trista Xinyi-Luo, who has the details for us. And so what do we know about how on the hook they actually are here? Let's start with that.
Yeah, so everything become more concrete and serious and intense among partners, especially after mid-May. They hear the claim number from the liquidator. So Evergrande liquidator actually claimed $8.4 billion against PwC International and PwC Hong Kong and PwC Mainland China affiliates. So for those partners, for Hong Kong, the auditing firm actually registered under unlimited partnership, which means that the partner will share any liability as well as profits. So for those audit equity partner, they need to, start to worry about if the liquidator can go after them individually. So that's one of their biggest concern for those partners right now.
And it's interesting, you've been talking to some of them about the creative ways that they're going about possibly, or considering at least, to protect their assets. What even from divorce they're talking about?
Yeah, divorce is usually, a common way for people when they consider to protect their own asset, right? Divorce is one way, and then, shifting money to transfer more money to family members is another way. And then, some are already cut the education budget for their kids because they're gonna be well prepared for what's coming next. And then for the existing, those equity partners, some of them are considering to fasten their plans to leave the firms because for them, the concern is about whether they will be asked by the firms to chip in more money if in the future the firm actually needs more money to run the business. And also, their compensation package will be further impacted because some of them their compensation package already being impacted. Even back in 2024, when PwC Mainland China affiliate being penalized by the mainland regulator.
Yeah, I mean they lost
50 to 60%
to do business anyway, right? So the revenue stream's gone away. So when do we know in finality whether the liquidator can in fact go after their personal assets?
For such a case, it usually lasts for a long time, right? Okay. I think the next thing for us to watch is whether PwC International, which is the umbrella entity for the firm worldwide, can successfully strike out from such a case. Because if they can do that, it will leave the burden to the mainland China and Hong Kong affiliates, which means that those partners need to, further think about how to better protect their own wealth.
Trista, thank you. Trista Xinyi-Luo there, our credit reporter on the latest when it comes to PwC. We've been tracking some other corporate news this morning. Oracle shares fell in extended trading after fourth quarter capital expenses came in higher than estimated, overshadowing AI growth. Now, Oracle has refashioned itself as a provider of AI computing power, embarking on a massive build-out of data centers for OpenAI and other customers. It plans to raise up to $40 billion in equity and debt by fiscal 2027 to fund further expansion. OpenAI says China-linked accounts use ChatGPT to stir opposition to U.S. data centers. Now, it says the accounts generated English-language posts, raising concerns about rising electricity costs, and were probably tied to a private Chinese tech firm that they didn't name. Now, OpenAI says the postings did not have a wide reach, but should raise concerns about foreign attempts to undercut a strategic industry. KKR says markets may be underestimating AI's power demands. The firm's head of real assets says there are signs of frothiness in digital infrastructure, warning that too much may be built relative to current demand. KKR says it's not taking a view on AI growth, but instead focused on positioning for the opportunity.
Look, we know from the telecom issues in 2001, these things do get overbuilt. And so there will probably be some overbuilding, and we also don't know which large language model is going to win. I mean, so to me, this is know thy customer, make sure you have contracted revenues, and don't do the if they'll build it, will come. I think you're going to see some of that. That's not what we're trying to do as a firm. Particularly, we have a leading infrastructure franchise. We do a lot in AI and the data center build out, but we're trying to be disciplined around that.
All right, an update of cash markets right now. It's mixed, which, trust me when we say this, we're actually in much better shape than we were about 90 minutes back. Lots more ahead. This is Bloomberg.
All right, we've been tracking the best of the best from Bloomberg Invest yesterday, Dave, and we talk about Baidu. It was a very interesting conversation there. As AI spending accelerates, Baidu CFO says balancing capital allocation with shareholder returns is a, quote, impossible triangle. Henry He spoke to the Bloomberg Invest Hong Kong about which aspect of the company's AI operations he sees as a must-win.
Cloud at this moment is a platform. You can not only hosting ERNIE, which is our own model, but also I can work very open to hosting other models. And my chip, which connecting to my cloud platform, can also help on the inference. Because right now, the pre-training is important, but 80% of the incremental demand today on a token are inference related. I think this part of the full picture is what I want to emphasize, but given a tough question, if I want to pick one as a student, A, B, C, D, I want to pick number C, which is my cloud.
How are you actually allocating capital? And then how are you actually, I guess, balancing that with returning capital at the same time to shareholders?
Yeah. So I called it impossible triangle. So I kind of scratch my head every few months, every few weeks, depends on, I also see the headline numbers on Bloomberg News with other peers as well. So sometimes I make a little bit kind of hesitating to make a statement, but I just want to tell the facts and tell the views. I want to separate them out. Sure. So in the recent quarter earnings, we mentioned we actually solved partially on this impossible triangles. One is our operating profit increase almost doubled on the Q-on-Q base. And number two, our cloud revenue grew about 79% on a YOY basis, which is almost double of the YOY growth rate for the cloud market in China. And number three is, since Q3 last year, our operating cash flow has turned positive. So positive operating cash flow, incremental operating profits, and higher growth than the market. However, my CapEx is not seeing kind of double, even third, multiple times. So I think the way of resolving that is, as a CFO or as a management team of a heavy CapEx invested AI tech company right now, need to find a way, on one hand, really drive the growth, but also keep the density of the investment into AI in a reasonable pacing.
There you go. That was Henry, Joe, and Tracy. There we go. Henry He, the CFO of Baidu, and of course the Odd Lots folks and the hosts, Joe Weisenthal and Tracy Alloway. Of course, they're here in town in Hong Kong. In case you missed them, of course, they are still in town. So lots more to watch out as far as that's concerned. Very quickly, just a glance at markets. Several sectors that have been in focus today. So we've been talking at length about the dip that we, in some cases, are still seeing across Hong Kong listed financials on the back of the bigger story a few weeks ago on this tighter oversight over cross-border flows and how that affects their businesses. AIA, though, is going the opposite way on the back of that call out of Morgan Stanley.
They're saying short-term valuation more compelling right now. So when it came to concerns about the further regulatory clampdown, they do not think it could happen according to that team. So certainly that's why you're possibly seeing that rebound when it comes to AIA. The rest of the market, though, even JP Morgan was saying when it comes to some of these banks, could be an entry point too. When it comes to the oil stocks, obviously they've been following the oil price higher here this morning. You would take a look at, well, naturally there's been a mixed picture, but PetroChina is slightly higher, but we're back to close to 94, 95 levels for Brent here this morning. Airlines, obviously, given what we've been seeing with oil prices, they could have the opposite story. There you go. Japan Air, Qantas, Cathay. We should probably add some of those Chinese airlines too. DBS had an interesting call.
This is a one world collection, actually.
But DBS had a pretty interesting sort of line here as well when they talked a little bit more about, they did upgrade some of these Chinese airlines, just talking about maybe things are looking a little bit better there on the margin. When it comes to APAC Big Tech, this is what we're checking here today. When it comes to, of course, the likes of TSMC, Samsung, Advanta, SoftBank, all falling here today. SoftBank is really driving that charge or lower by a little bit more than 1%. So still some nerves amidst this little tech trade. And MXCP looking like this here right now. We talked about how when it comes to some of these Chinese markets, what Hong Kong is doing, we're near those 11 month to 1 year lows. And today we are still seeing some angst across these markets.
We really are. And I think it's that vacuum of space. And I'll use that with the SpaceX analogy, and that vacuum, that giant sucking sound you hear, of course, and feel. As we look into what our reporting suggests is an IPO that is $75 billion, that is 4 times oversubscribed. Lots more ahead of that, plus the bond markets and inflation story just ahead in the second hour of the China Show.
Welcome back to the China Show. A look at the CSI 300 half hour into the session, and we're coming off some of the initial momentum here. We're seeing downside about 1/3%. Same goes for MSCI China here this morning. So there is still a pressure across risk assets across the board here in Asia today. When you talk about Middle East tensions flaring up, we did talk about the U.S. and how they've concluded some of those strikes on Iran. But still, the oil price is a little bit more elevated here this morning. You pair that with this big launch of SpaceX IPO in the next 48 hours, pricing could come out later on tonight. So there's a lot at hand here, and maybe perhaps some reason to kind of push cash aside here leading up to those that big IPO. So there you go. Chinex at least is doing, relatively speaking, better. We're up about 1/3%, but the rest of the region is looking like this. It really is being driven by the likes of Taipei here. So we're lower by about 1.25% here. Kospi, we went from erasing 4% losses, now went positive, and now we're back lower to about 0.9%. Nikkei also not doing quite well. There was that news of the governor of the BOJ, Ueda, has been hospitalized, and he will not participate in next week's BOJ meeting. So certainly that's one thing that we'll be tracking as well. Indonesia just opening up here, we'll see. So it's interesting what we learned, that the Bank Indonesia governor actually had a 90-minute call late Tuesday night with investors and really trying to reassure the market here about what moves they could do to kind of restore some more confidence and maybe put more stability in the currency. We're hovering around that 17,941 mark for the rupiah here right now. JCI is also in positive territory. And MXCI AP is looking like this here right now. It's not looking too good. We're lower by about 0.7%, Dave.
Yeah, it's been quite a volatile session, and I think it just goes into some of the things that we talked about here. US CPI, we'll get into that in a moment. SpaceX, we talked about that as we go into pricing and, of course, going into the weekend, which is the actual listing itself. And don't forget about the Fed, right? The inflation numbers then, a bit of a head-scratcher how that affects what the Fed will signal in as far as pricing goes. Okay, so this is about 1,000 stocks in one picture. As you can see, it's mostly red. That's why the benchmark is actually red. And you do see, of course, some of the big ones like TSMC and Samsung. These are the tickers. They're actually doing much of the damage in as far as the pull is concerned. You are getting some buying, though, in the likes of SK Hynix, for example, is 2.8% to the upside. Most of financials are actually down. Mitsubishi UFJ, 3% down on things like Alibaba. Tencent's also here as well, slightly to the upside. But I just want to focus in on, of course, some of the big winners like semis and, of course, hardware. We are getting some pressure and some profits being taken off the table there on the back of several headwinds that these risk assets are facing going into the next, let's call it the next 5 or 6 trading sessions.
Yeah, it continues to be that inflation sort of, I guess, elephant in the room, right? On what we're seeing. And you look under the hood, not just of what markets, but under the hood of that U.S. CPI print that we got overnight. We actually saw when it comes to the headline numbers, you saw U.S. inflation accelerate to the fastest pace in more than 3 years. But then you take a look at what's going on in the core inflation numbers, and that's where you're seeing signs of maybe a relief for the new Fed Governor, Kevin Warsh, where it basically halved from April, right? 0.2% when it came to core CPI as well. Nevertheless, the market initially did look at that as a relief, but then once oil prices started to go up again, we did see Treasury start to sell off here. And still, when it comes to those rate hike bets, we're actually unchanged after that CPI report. So we're still pricing in one rate hike by the end of this year. Okay, let's bring in Chow, portfolio manager and Asia head of fixed income at Robeco, joining us today to talk about rates, macro, and everything in between. Chow, very, very nice to see you, and good morning from Hong Kong. Can we start with your assumptions on the macro? What do you think the next move from the Fed is going to be? Is it going to be a hike or a cut?
No, we think they're going to keep it on hold. The reason is that I think at least the CPI number yesterday gives the FOMC enough reason to hold for now. I think a hike is a bit too early to be expected, given the fact that we know that the labor market has been holding up well. But one of the kind of things that we may be reading into the more cautious core numbers could be that actually, because headlines is so high, that consumers are actually being kind of priced out of other stuff, and therefore the demand isn't so strong in non-discretionary items. So therefore, we're kind of watching that carefully to say, is this the first signs of actually demand destruction from the very strong higher energy prices that's feeding through?
Yeah, I mean, it does raise some questions about the health of the U.S. consumer now, Tuha. Where does that leave rates then? I mean, when I'm taking a look at when it comes to the Treasury curve, I mean, we're a little bit well above the 5% handle for the U.S. 30-year yield. Do you think that we've reached a peak when it comes to where yields are now?
We think in the short end, I think that feels like it's overdone. So we're kind of quite kind of constructive on the 2 to 5 years part of the curve. We don't think that we're going to see any hikes anytime soon. On the 30-year, I think we probably more targets more like a 5.25%, just because I think there is going to be a bit more concern in terms of risk premium and term premium being priced in, as we look to expect that inflation might become a bit more embedded, even if the conflicts in Iran kind of calms down. We don't think that we reach a conclusion to that means that inflation is going to be out of the way anytime soon.
So I think since the war started, most fixed income strategies haven't done well, I think with the exception of maybe high yield. Do you think that continues, or is there value emerging in some of the losers, like long duration, for example? How are you looking at value at the moment?
So I think we're still relatively cautious on duration, although we're beginning to feel like certainly now that the market is beginning to price in what our scenarios of a higher yield. So we're beginning to get there. So we're actually a little bit more constructive, and we're just hoping that in the next few quarters, as we get a much more kind of clearer picture that that some of these levels will reach a level that they would be more stable, and then therefore fixed income would be actually back in fashion. But it seems very hard, given that everything is very much focused on the big tech stocks right now.
That's true.
Yeah.
And you're seeing that sort of dichotomy between what equities are looking at and what bond markets are really pricing in. How do you look at EM right now? I know you have to be quite selective. What you're starting to see the clear winners and losers of this whole oil story play out. I look at a market like Indonesia, where there is that commodity play, but the market seems to be focusing on other things, whether it's fiscal concerns, central bank independence, and the like. Have we seen and have we heard enough from policymakers to reassure you that things could look better from here on forward, or do you think there's more pain ahead?
So we were quite cautious of Indonesia kind of earlier this part of the year, but we're beginning to feel like the market consensus is moving, not quite there, but nearly there in actually dealing with some of these issues. I think policymakers are now beginning to acknowledge and some of the pressures, whether it's MSCI, the rating agencies are forcing the policymakers to relook and actually think about how important it is to deal with the confidence issue. We're hoping, there's a few things that we're looking out for that they can try to. I think they're working very hard with the rating agencies right now to make sure that that they can alleviate some of those concerns. And of course, they are also, from what we're hearing, working quite closely with MSCI to deal with some of those structural issues. So we're beginning to feel like the market is forcing them to act, and I think the BI this week kind of taking actions to indicate again they're willing to do something to alleviate these concerns. So beginning to see the beginnings of a turnaround story for them right now, but not quite there yet. Still a few data points to look out for, and again, confidence is one of those things that it's easy to lose, but it takes a little bit longer to regain the market's trust. And until that happens, we're going to have to see a bit more value that needs to be put in before the market becomes very excited. You just have to overshoot. That's how it works when you've lost confidence.
Yeah, and they need to convince people like you on the buy side, and the fact that they are getting on these calls based on our reporting, talking to investors, that's a good thing. But it also, I think, underscores too that it's gotten to a point where you need to get on a call with investors too. What more do you need to hear or see then for at least your confidence to come back fully?
So, for example, the coal commodity export kind of announcement wasn't very clear. It's going back and forth. Is it 6 months seems ambitious? These type of action, can shake people off. Now, in itself, it may not be a bad policy. Again, communication, being clear, being systematic, which I have to say, Indonesia had become quite good of in the last kind of, we've been looking at this market for a long time. And it feels like they've lost that, and they need to go back to giving confidence that the institutions still work, that credibility is something that they strive to have. And then hopefully we can see a bit of turnaround. So because again, underlying, Indonesia's fundamentals, it's got the commodity exports that we all think that is actually structurally important in the long run. But again, confidence in the institution, in the independence. This goes across not only to Indonesia, but all the central banks become extremely important because fiscals are under pressure, because we're having to, a lot of governments are having to use subsidies to reduce the impact of the energy shock. So again, this is where institutional credibility can reduce your risk premium quite a lot. And if you lose it, you'll have to pay up for it.
Yeah, I mean, that underscores the value of having that, that value to begin with there. Very quickly, 19 days from now, we enter the second half of the year. Your outlook very quickly on bond market volatility.
Yeah, so we think that we will have to be volatile, which is because there's still quite a few things that have to happen that we don't see any clarity right now. We're going back and forth about the Iran war to the point that actually people are almost tired of hearing about it, but the conclusion doesn't become clear. I think that's the problem. I think as we hit towards the midterms, we think that the noise and the pressure from both sides will get higher. And at the same time, the feeding through of the inflation issue from the higher energy prices hasn't actually fully come through. We don't know if this is going to result in some sort of demand destruction. And another thing that I think people should be talking a little bit more about, one of the things that we've been maybe on our side kind of wrong about has been how strong the AI boom has actually helped the U.S. economy. And we saw in the labor data, so we were probably a bit too cautious on that. However, it's beginning to become a concern that it's crowding out everything else. So yes, it's great to have an AI tech boom, but if it's only focused on that sector, and then it starts to crowd out everything else, then it becomes a concern. So I think those are the things that we have to look out for, and that's why we think that until we get some of those issues bedded down, it's going to lead the market to be volatile in terms of deciding if it's too much AI, too little AI, too much rate cuts, and then all of those things will mean that we flip and flop until we reach some sort of clearer conclusions of these things are actually net positive, or do they actually crowd out and cause a higher risk premium across the board.
Good to hear that. Thank you so much for the insights. Chow, Portfolio Manager and Head of Fixed Income for Asia there at Robeco. From that, of course, we're going to go, which is the other top story we're tracking across these markets today. We did get very close to 4,000. We're coming off a little bit, so 41 right now, but still, of course, we're down about 28%. The equity market iteration on the right side of your screens, and as you can see, some of these miners are really feeling the pressure as we go into the thick of the session this morning, this Thursday in the Asia Pacific.
Yeah, for more, let's bring in our Bloomberg metals reporter, Yihui Xie, joining us from Singapore. It continues to be a downtrend story when it comes to gold prices, Yihui. What do you think is the cause behind this latest slump?
Yeah, and I mean, as we were speaking, gold has reversed its earlier slump in the day because we had the latest news from the U.S. about completing latest strike on Iran. And I think this is a pattern of movement that we have seen over the past few months, where the Iran headline has really been driving gold's movement. And I would say that in the latest movement, in the past few days in particular, we do see gold falling below key support levels, such as 4,100 yesterday, and also the 200-day moving average. So that breaching through of technical support is really testing investors' confidence in what might otherwise be a haven.
So near term, is the direction of travel or trajectory, is that likely to the downside over the very near term is the question?
Yeah, I think it's kind of uncertain as with the rest of the market. I would say that it seems like investors are not having that conviction anymore, unlike what we have seen over the past year. So I think that movement might continue to be vulnerable, and some investors and analysts are talking about potentially going below $4,000. And I think that's very likely, given that there's so much uncertainty unraveling in Iran and in the region, and we also have the hot CPI print that we talked about earlier on. So I think the next move is pretty much dependent on the war, and also any more clues from the Fed about the next rate decision. But in the meantime, we do see that the gold market is forming some kind of a bearish pattern, where you are seeing higher, lower lows and lower highs, and that is not optimistic. And so I would say that that people are saying that you shouldn't be buying the dip, and I will agree.
What about in terms of, I mean, we have a lot of strategists that come on the show that say, look, now it looks volatile, but the longer term bullish case is still there. Do you think that the bullish case for gold longer term is still intact?
Yeah, I would say so. I think that's what the market has been expecting going forward in the longer term. So one of the data that we see from, say, over the weekend, we see that China's central bank, which is one of the biggest gold buyers in the world, has added 10 tons of gold reserve. And that is actually in a trend of acceleration from the past few months. So I think that is another sign that these longer-term investors might be still adding on to, holding on to their gold and adding into their reserve. But I think it's just that in the near term, that support is not enough to sort of counter the lack of investor confidence. So we may still see lower prices in the near term, but the market in the long term is still optimistic.
Yihui, thank you. Yihui Xie there, our metals reporter joining us out of Singapore on gold. Still to come, we're going to talk about Bank of Japan. The Governor Kazuo Ueda is set to miss next week's policy meeting after being taken to the hospital. We have an update from Tokyo next. This is Bloomberg.
Yeah, these markets, specifically the Hang Seng Tech Index to my right, year-to-date look, and as you can see, it hasn't been a great year, and in fact, at the moment, we're now trading at the lowest level. We just took out the low in April, and some of the big contributors there to the downside right now of 2%, everything from BABA down to Xiaopeng. We'll talk more about this, of course, later on.
Yeah, these losses seem to be extending here today, and yeah, we're around those session lows when it comes to the Hang Seng here in particular. We're 2% losses for HSTECH right now. Let's switch on and talk about another story in Japan. So the Bank of Japan Governor Kazuo Ueda is in the hospital and expected to miss next week's critical policy meeting. The BOJ confirmed that Ueda is being treated for a liver cyst infection, and treatment may last 2 weeks. Let's bring in our senior editor, Brian Fowler, joining us out of Tokyo here this morning. So, of course, our hearts and prayers go to the governor. I hope everything's okay, Brian. But can you tell us a little bit more about his absence? Do you think it changes anything about this upcoming BOJ decision?
Yeah, I don't think it. I mean, the one thing it will change is the vote, because he said he will not actually participate in the vote count. So we'll only have 8 votes to count. But beyond that, I don't think it changes anything in terms of the outcome. He's made it clear over the last week in a recent speech that he seems to favor a rate hike. And we've seen that even people who, board members who advocated easing or keeping policy settings steady the last time around have come out recently in favor of a rate hike. So the numbers are there to proceed with a hike on the 16th. And I think we'll get it. I think maybe, it won't be unanimous. Maybe Asada, the new board member who's a reflationist, may dissent in favor of a hold. But otherwise, I think we're looking at maybe a 7-1 vote in favor of a hike.
So Brian, after the decision is announced, we then move into the briefing where it's obviously it should be the governor that's facing the press and answering questions. In this case, it will be the Deputy Governor, Uchida. How does that change our expectations of messaging and tone and all the other important things?
Yeah, David, that's very important because with widespread expectations of a hike, that's going to be mostly priced into the market. So the key thing is what the governor, or the deputy governor in this case, says at that briefing about the trajectory to come going forward. And we've seen in the past, the Governor Ueda has sometimes sent kind of mixed signals. He's an academic. He tends to argue both sides of the case and has sometimes come out sounding a little dovish. And we saw the yen sell off. I think Deputy Governor Uchida will endeavor to send a very clear signal that while there are still lots of uncertainties going forward, namely the Iran war and how that impact will filter through the economy, I think he's going to try to send a very clear signal that the trajectory still points toward further increases later this year.
Brian, thank you. Brian Fowler there, our senior editor in Tokyo for us. We will leave you with a brief look at markets. We're at session lows right now in the benchmark. We'll unpack some of the big decliners next. This is the China Show. Welcome back. Just an update. The Spurs are in control in New York. The Bears are in control here in Hong Kong. A heat map look at the Hang Seng Tech Index, where virtually every single stock, with the exception of about a handful, are down. As you can see, so BYD, Alibaba, Meituan, Xiaomi, and some SMIC, as you can see, are leading the downside here. And these are very heavily weighted in large stocks as well. With, Alibaba down about 5% is going to do that to you. We're down about 100 points in the Hang Seng Tech Index. These, of course, have an overlap when you look at it from a sort of Hang Seng Index perspective. And because of the pressure here, we were looking at the specific level as we went into the open today. And we have now taken out that level to the downside, which was the level that we hit back in late March and early April. That's coming up on your screens very shortly right now. And we are now trading at an 11-month low on the Hang Seng Index. There's a level, and we're back to effectively levels here of the last July, Yvonne.
Yeah, so continue to see that, we could be getting back to the year's low. And really just not much upside, right? Especially when it came to some of these, China tech plays, which continue to be the big losers across the board here. We are seeing even just the traditional darlings of AI are seeing quite a bit of pressure here. TSMC, we're seeing losses of now close to 1.5%. Samsung is also down by 2%. There you go, Baba down some 5% this morning. This is Bloomberg. 11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment. We are seeing the sell-off kind of gain a bit more momentum across the board here in Asia today. Hang Seng in particular has been feeling it. And SoftBank continued to see 4% losses here today. And that's really kind of dragging Japanese equities here today. We're lower by about 1.5%. Dollar yen still around that 160 level here, of course, as we count down to that BOJ meeting next week when we will be missing one person. Mr. Ueda.
Yep, he was hospitalized and is expected to miss, of course, the meeting next week. And, of course, the government is wishing the BOJ governor, of course, a swift recovery. Let's have a look at the rest of the region as we go into the thick of things. And, of course, 1.6% to the downside right now in Asia-Pac. So, yeah, it certainly has picked up in terms of momentum to the downside, volumes in most parts of the market, 260s now, very much in focus in the benchmark itself. The dollar is actually coming off a little bit as well, which isn't helping actually risk assets as we speak. Energy is seeing some upside given the pop in oil prices. Seeing the rest of the regions not doing well. Right, let's get to one of the stories we've been tracking today. So Bloomberg has learned that, remember, Ant Group, Ant Financial, the international business is considering raising about $1 billion to accelerate growth. Now, Bloomberg Intelligence thinks that the company's fundraising may actually support an IPO upside. Let's bring in our team for the details on the story, plus analysis. Min Lo, our China correspondent, is here, and also Francis Chan, out of our senior analyst, of course, who oversees it. Min, let's start with you. The fundraising is expected to lead to a potential IPO. What more do we know about that path?
Yeah, so this is according to what sources are telling us, and I just want to draw a distinction here between Ant International and Ant Group. So Ant International was carved out of Ant Group after that regulatory crackdown back in 2020. So it's now headquartered in Singapore. It answers to the MAS rather than the Chinese regulator, so that puts it on a faster path to an IPO. So after this fundraising, $1 billion that they are seeking, some are speculating that we could see potentially an IPO as soon as this year in Hong Kong.
Soon as this year?
Yeah.
Pretty soon, you think, Francis? What do you think?
I would say that obviously this round of fundraising that has given a more positive signal on this IPO. But I just want to reiterate, its CEO, David Finjan, back in 2025, he reiterated they will focus on growth first, and they will only consider IPO when the time was right. But then now we see another round of fundraising, $1 billion, especially when the potential valuation has been about $10 billion or a little bit more of that. We are seeing some positive signal, if not this year, early next year. Yep.
So, Min, if they do hit the markets this year to raise money, what will foreign investors buying into? What's the business they're buying into here, to build on your earlier point?
Yeah, so it's a pretty solid business now. They have, took some years to really stabilize the company's operations. It's looking at, I think, more than $3 billion in revenue last year. The main business, of course, has been the cross-border payment service known as Alipay Plus. So they support more than 300 ways or 300 methods of financial payments. And then they have a merchant-facing service that allows merchants to accept payments in over 100 currencies. So they have the consumer-facing business, they have the merchants-facing business, and they have a B2B one that settles cross-border trade payments. And lastly, they also have this AI-assisted lending business that helps to handle forex management as well.
You mentioned, Francis, this valuation of Ant in your report. So when they're talking about raising $1 billion, they could value the business at $10 billion plus. Tell us about the comps.
Well, Bloomberg Intelligence has its own thematic research team coming up with a basket of 27 comparables. And just based on yesterday's pricing, I think the valuation based on price to sales ratio, based on the 3.7 billion revenue for 2025, we do see a valuation of 11.5 billion. And that could be an upside too if we take the upper bound of the range of 14 billion. So that would be the basis of our analysis.
All right. Francis and Min, thank you. On this ant story here, Bloomberg Intelligence senior analyst Francis Chen and our China correspondent Min Lo there. We're checking Asian markets here. It looks like the sell-off is getting a bit more traction here right now. Not looking too good as we count down, of course, to that SpaceX IPO. Pricing that comes out a little bit later on here today as well. And obviously, we're still digesting some of the inflation numbers that we got out of the U.S. and the Iran situation here today. This is Bloomberg.
I think mathematically, it's very hard to see how you could see SpaceX delivering the same kind of returns as a public company as Tesla did. But I think what this speaks to is a requirement for investors to have exposure to growth in both the private and the public markets.
The smaller caps, which we are now, I guess are much more difficult to get the attention in the short term. Now, medium term, I really hope they do well because they're really important moments for capital markets and their depth. And if they do well, you'll get more confidence in the IPO market.
All right, that's some views from our guests, of course, on the upcoming SpaceX IPO. We talked about what the timeline's going to look like in the next 48 hours, right? So pricing could come out a little bit later on here today. And then, of course, that listing to follow. We also did hear from veteran short seller Jim Chanos there is also bearish on the world's biggest IPO. And he's really saying that the company has revenues of only $19 billion and negative free cash flow. So he told a conference in New York overnight, he says, this is really a hopes and dreams IPO. You can build whatever stories you want, colonies on Mars, factories on the moon, data centers in space to justify that valuation.
I think trading, is it 90 times sales, I believe, is what I saw on the latest one. This story is so, I think maybe just the latest, right? So I think the books have closed. It's our understanding it's 4 times oversubscribed.
Yes.
The pricing is in a few hours meaning, of course, Thursday in the U.S. And then, of course, we start trading. There's so many angles to the story.
There's so many angles. And I think in this part of the world, it's really about this enthusiasm among the retail sector about getting their hands on this IPO. We certainly saw that enthusiasm in Japan, right? When they're talking about, they're earmarking 30% of that IPO for individual buyers. There's a scramble that's underway.
Well, there are no IPOs in Japan as well. No big ones.
No big ones. Right? They're starving for something, right?
Yeah.
So certainly there's that. Then there's that Middle East story that we had there, the scoop about how I think they're scooping up orders of what? I think 1 to 5 billion, I should say, when it comes to from the funds there. So there's plenty of demand from this part of the world. Of course, we've talked about our reporting from Bloomberg about China and Hong Kong investors here not able to participate in this IPO. So this frenzy continues here. We'll see how this all plays out, whether we see a smooth launch or not.
Well, I like that.
Well, think about what happened with Facebook, right, when it listed. There were so many technical glitches here, right?
Yes,
so they're trying to smooth that out to see that all things are systems go.
Well, it's the dress rehearsal before Anthropic and, okay, I didn't mean it that way, okay. Just, they're all important. This is a big one, too. So the other story that's interesting, too, and I recommend this to all our clients and viewers, too. So there's also the portion where, and then I'll read you the headline, SpaceX leaves some banks quite peeved at the junior role to the IPO lineup because some junior bankers who are working for a smaller slice of the fees are being relegated to roles that don't come with even credit.
The co-manager's role.
Yeah.
Not so much the underwriters,
But you're still getting paid.
you still want to be part of it.
Yeah, but I guess some people really want a tap in the back. Thank you for your work. Yeah. That was fantastic.
Yeah.
Here's the plaque. Here's a social media like. Be on your way and focus on the next deal. But anyway, this is going to engulf your newsfeed over the next 4
there was
years.
also a lot of talk about how rushed this IPO was in some ways, right? And whether it should be or not, speed up the addition on some of these index providers, right? So that certainly has ignited a lot of debate about whether index providers should be doing that here, ramping up the addition of these newly listed large companies and how fast-tracking them would affect people's 401ks and really broader equity performance. Let's bring in Julie Ren, from our Bloomberg opinion columnist. She thinks China should also be looking at this case here and having a conversation and taking a closer look at the makeup of its benchmark indices. Julie is here to explain more.
So China's stock market is not doing so well, right? CSI 300 is flat for the year, and the Hang Seng Tech Index is down 15% for the year. And one big problem is that is index composition. Basically, if you look at CSI 300, the chip and the hard tech companies account for just over 25% of the total index. Whereas if you look at Korea or Taiwan, it's like 60-80%, right? So China is definitely not at the epicenter of the AI trade, even though the government is talking about AI all the time, right? So I think what's happening is that China needs to make sure that its main stock market index reflects more of the new economy stocks, and that perhaps phase out a little bit of the old economy stocks, because we know they're not working, right? Banks' earnings are not working. Consumer discretionary or staples firms, their earnings have been revised downward steadily over the year. And I think that's a conversation China should be having.
Well, is it the case that China is doing poorly, or is it just a specific combination of stocks that makes it appear that China is doing poorly on AI?
It's the latter. The Chinese AI stocks are also doing super well, but they are just a smaller portion of the total index. And in fact, China also has a big IPOs coming, right? The robotics maker Unitree has applied for public listing on the Shanghai Star Board. The two big memory chip makers, they are also going to go public in the Shanghai Star Board. But these companies, because they are listed on the Star Board, they're not going to be included in the main CSI 300 until at least 1 to 1.5 later.
Okay, Julie, thank you. Julie Ren there, our Bloomberg opinion columnist. Of course, for subscribers, you can check out her column in full piece today. Sometimes bending rules can revive a stock market. That's also on the website, Bloomberg.com. We're checking markets, Dave.
So we are looking at losses, and quite steep ones, not specifically things being thrown out the window, but substantial enough that we are trading at much lower levels than we were, let's call it about an hour back. In fact, the Kospi index was lower, was higher at one point. We're lower again, and I believe we're at session lows on most benchmarks across the region. We've scrambled to get Lenting 2 to join us right now to tell us exactly what's going on. And I guess you guys are very busy to figuring that out, Lenting. But why effectively are we trading now at session lows in most benchmarks here?
Yeah, I think right now it's, again, there's a lot going on. There is a geopolitical tension that the hot headline about U.S. completing Iran strikes sort of lifted sentiment a little bit. But there is also the ripple effect about sticky inflation and also the SpaceX IPO you guys were just talking about. There's a lot of enthusiasm about it. There's a lot of people trying to still get onto it. For a lot of Asian retail traders, maybe not directly get onto it, but looking for other methods to get onto it by, space-linked ETF. Or by NASDAQ, which will get SpaceX added in 15 days after trading. So there's still a lot of calculation going on among retail traders on how to, which stocks to buy and what kind of products to own. So that kind of explains the kind of, intense volatility we're seeing in the market right now.
Well, I want to zoom in a little bit on HSTECH because we've seen the losses actually be a bit more pronounced, particularly when it came to Baba. Even overnight, we saw a lot of these consumer names were actually benefiting, with the exception of Baba. What do you think is going on in sort of the China tech space specifically?
Yeah, it is again about attention, right? There's a lot going on vying for investors' attention, but China doesn't really have much to offer right now, especially in the offshore market. We're looking at MSCI China index. It is one index that's standing out in terms of getting close to entering a bear market. When we talk about other markets, sliding from record highs. So again, the kind of consumer-heavy weighting in the offshore China stock indices is really not helping. And if you look look at the onshore market, performance relatively better because they have more hardware stocks in their indices. But again, there is just a very narrow breadth that is playing out right now. Again, a very unhealthy sign. So if you look at stocks that are hitting new highs, not many actually, and more stocks are falling rather than rising. And only 30% of stocks are still at above their 52-week average, week high, versus 80% earlier this year. So you can see the deteriorating breadth that's playing out even in the onshore market.
Oh yeah, no one likes bad breath. Lianting, let's end on a positive note. Any bright spots, anything moving to the upside right now within the equity space?
Yeah, right now I think, as Anthony's highlighted earlier, people are still thinking about some kind of quality names. We see memory names getting another look. We see Kioxia doing quite well in Japan and in China's onshore space today. A hot theme is these MLCC and PCB sector, I think very much linked to the data center news that came out about 2 days ago.
All right, Lianting, thank you. Lianting, too, there, our managing editor for Asia Equities, joining us out of Singapore, and leaving you with a look at how these Chinese markets are doing as we continue to track this sell-off here today. We talked about the HSI. We are still around those session lows and on track to really lose all the really gains that we saw for 2026, 11-month lows right now. And as we talked about, we are nearing a bear market here when it comes to, of course, offshore equities in China. This is Bloomberg. As if we didn't have enough to worry about already. Now we got to talk about the weather, right? I don't know if you saw that yesterday afternoon. It was a sort of a red, we call it redhead on your terminal screens here, about El Niño. Has formed across the Pacific. That's according to the Japan Meteorological Agency, and really raising the threat of droughts, floods, and extreme temperatures worldwide. And this is the first El Niño event since 2023 and could be one of the strongest on record. Similar events have historically reduced yields when it comes to palm oil, coffee, cocoa, cotton, and grains, including wheat and rice. So we're watching very much the impact this could have on soft commodities. You take a look at this chart. I mean, it's quite color-coded, but you take a look at, the chances of El Niño forming by the end of July. That was some of the early sort of estimates here. That has basically climbed to about 80% there, according to the U.S. Climate Prediction Center, and chances of either a strong or very strong event. That's why the darker reds that you're seeing here since last year. So this was sort of a long time coming, but it seems like we're here, according to what we heard from Japan. Dave.
Yeah, absolutely. So that actually did cross the Bloomberg terminal yesterday, that red headline, similar to that hue of Hong red that you see there with Yvonne's graphic there. So let's get more details on this and why it matters. Why is this important? Because it really is. Mary Hui, our weather reporter, is with us right now to tell us more about the significance, of course, that confirmation out of Japan and that declaration we got yesterday.
Yep. It's one of the most closely watched indicators of what weather to expect. Weather is inherently chaotic, unpredictable, but here with El Niño, we're getting a clear set of clues for what to expect in the months ahead. And so markets, governments, farmers, all sorts of industries are looking at it very, very closely just to shape their decisions and how to shift various resources in the weeks and months ahead.
That's a good point.
How is this going to play out in the coming months?
Most of the forecasts are predicting that El Niño will continue strengthening and peak around December, January. And of course, a powerful El Niño raises the probability of more severe impacts, but it's not a one-to-one direct correlation, right? So historically, we have seen strong El Niños lead to actually not particularly severe impacts, say severe droughts or severe floods elsewhere. And so it does load the dice for more significant impacts, but we do have to keep an eye on how exactly it will play out. Closer to home, probably in Asia, we're looking at how the Indian monsoon will play out. Will it be significantly drier than years prior? Also on the typhoon side, usually we will see more typhoons in the West Pacific, around the Philippines, around Japan. So whether that will play out will have significant impacts for
and usually those systems to head to Hong Kong after they hit some of those places ahead. There's certainly been a lot more talk about how strong this one is. In fact, Super El Nino has been discussed. What's that about? Is that something we should be worried about, or is that just a tail risk at this point?
It's definitely a catchy phrase, and I think generally that is good for raising awareness. It is not an official term, right? But it does refer to how much a particular segment of the Pacific Ocean is warming. And the stronger it is, the more likely we'll see severe impacts, as I was just discussing. So, with the background of climate change and globally warming temperatures, we're kind of in uncharted territory as to how exactly a strong El Nino will interact with the changing climate.
Okay, thank you for the heads up. Well, this is something that we will continue to track as we go into the thick of things, and really when we are expected is to peak, which is December and January. Mary, thank you so much, our weather reporter there. By the way, for Bloomberg clients, we have an explainer on this. It's on the Bloomberg terminal. You can check it out, why the world is bracing for a rare super El Nino that's coming up on your screens very, very shortly, just to give you a sense of. So that's the details that we know in the latest, but you can read and everything that you need to know, and really how this might affect you, should be affecting how you make your decisions, so on and so forth. But yes.
And it's coming at a tricky time when you're talking about what's going on in the world, right? You're already dealing with an energy crunch. There's shortages in fertilizer. There's inflationary pressures all around the world here right now. So you add that to these weather concerns and what this could mean for soft commodities. I think maybe that does add to more inflationary pressures out there too.
Yeah. The higher rates conversation. So we now have one hike priced, and do expect that maybe to get slightly more upward pressure on the back of this too. Okay, so we'll have a look at that. Just very quickly before we wrap up the show here, there are lots of other movers, and we talked about this with Lianting earlier, and on a down day like today, there are some bright spots, PCB-related names on your screens as well. On the back, perhaps, with conversations around volume growth. This is according to Citi. On some of the things that go into the supply chain there. So there are some bright spots and some alpha actually that can be made here going into what really has been a downdraft story on an index level. The Chinex, though, I believe, last I checked, is actually doing quite well.
Yeah, so the Shenzhen's still, maybe relatively speaking, looking pretty good. I mean, what we're seeing in mega cap tech in China is continued downside. Look at Baba, we're down some 5%. Perhaps there's been chatter about OpenAI considering these drastic cuts. So you wonder what token pricing and really how is that coming to the fore when it comes to this whole AI trade. That could be some speculation out there at this point. But certainly it is sending some shockwaves against some of the big China tech names here this morning. Xiaomi's down 2%. XPeng, even some of the autos are lower by 6.5% here today, which, they largely have been beneficiaries of this oil price that continues to spike this morning. Hang Seng's looking at this, right? We're down 1.5%, 11-month lows. We are approaching, erasing all of this year's gains.
It's been quick, huh?
Yeah.
And compare this to other markets, which are, yes, they're down 6 to 10%, but you look at the chart, it's substantially higher still for the year.
Yeah.
Who would have thought 24,000 would be the level we'd be talking about going into the second half of the year? 24,000 to the downside specifically, too. Okay, before we wrap things up, just a look at the Game 4, of course, Madison Square Garden. You have the Knicks and the Spurs. I understand we are about to wrap up the third quarter.
Okay.
And I think the Spurs are up substantially here. So obviously a lot of things can happen in the fourth quarter, but it looks like it's going to be 2-2.
Yeah, 2-2. It's going to be a nail biter what Game 5 is going to bring here as well. But certainly, we're going to continue to watch what goes on in Madison Square Garden here today. That's it for us here on The China Show. We have Insight with Haslina Ahmed coming up next. Stay with us.